The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager. Time for a live look at Bitcoin. The CoinDesk Bitcoin price XPX index currently trading at $38,452. Bitcoin slightly up about 0.3% over the past 24 hours. And the CoinDesk Ether price ETX index at 2307. ETH slightly down about 0.9% over the past 24 hours. And the new DFX CoinDesk's DeFi index is also slightly down about 4%, trading at 501. All right. Lawrence, so we're seeing a bit of a bump for the 7th straight day of Bitcoin. Is this sustainable? And what, there are a lot of theories out there about what created this bounce in the first place, whether it be a short squeeze. Now we know the debunked Amazon rumor, the Elon effect. What say you? What could this be all about?
It's a soft, well, I mean, we're coming off a soft landing. We'll get a lot of these. But we have to remember where Bitcoin was a few months ago and where it is now. It's a far cry. I mean, you know, we're looking at a 30 handle. We were looking at a 60 handle just a couple of months ago. So we could get all excited and people could get all excited. Oh, we're getting close to 40. Hooray. But I mean, look at that. That's Everest that we're not going to be climbing anytime soon. I disagree with Jordan. You know, he was calling out numbers, 40 to 75,000. I should have taken
very high
the other
numbers.
side of that
Yes.
bet. Yeah, and you know, look, anything can happen in 6 months. Yeah, you could have a crisis where people flock to Bitcoin for safety, if you could believe that, in compared to other cryptocurrencies that won't be named right now. But you know, the market in general is not where it was before. And we have to pay close attention to what's happened in China. We have to pay close attention to the idea that the liquidity, the source of demand, is not where it was 2 or 3 months ago. And there might be institutional interest still, but the retail interest is not what it was. And if you look at the volume numbers, it's really low compared to where we were, and that tells us a lot.
And Emily, from the macro perspective, things from China appear to be dying down in terms of the fear, uncertainty, doubt there. Anything from a macro side that...
The media cycle has passed, but the situation hasn't really changed. China is definitely still very strict, but I think what we've shown is that, you know, China doesn't dominate the Bitcoin cycle the way that it might have in the past. So I guess that's sort of like the bullish message here, is that, like, China has been cracking down. This crackdown has been pretty serious, but it doesn't seem like it's going to have some sort of permanent impact on Bitcoin pricing. You have, miners fleeing China, but they're just going to other parts of the world.
And we continue to monitor developments out of Tether. Tether executives, of course, are reportedly facing a Department of Justice criminal probe into possible bank fraud conducted years ago, according to a Bloomberg report. Although the price of Bitcoin dipped on the news Monday, falling about $1,000 shortly after the report came out, it's unclear whether the Tether news will impact the market significantly from here on out. And joining us now to discuss is Francis Coppola, CoinDesk columnist, writer, and author of The Case for People's Quantitative Easing. Welcome to the show, Francis. So first off, I'd like to hear your take on the reasoning behind Bitcoin's bounce these past 2 days in particular.
Well, there are a number of possible reasons for Bitcoin's bounce. There was the Tether news, as you mentioned. There seems to be persistent news about Tether, and sometimes Bitcoin responds to it and sometimes it doesn't. So I'm not sure how true that is. There was also a bit of a short squeeze going on. And there was the news, or not news, that Amazon was possibly going to accept Bitcoin, which turned out to be Amazon issuing a job advert for a blockchain digital currency lead within their own development team. I'm not quite sure how people got from one to the other, but it did cause a bit of a stir.
Francis, what do you make of this Tether news within the greater narrative of the crypto market's stability, and how regulators are increasingly sounding the alarm on the transparency of stablecoins?
It's not really clear whether this particular action is related to the noises we're hearing from regulators about the need to regulate stablecoins and the systemic risks that they pose. The Department of Justice has been pursuing a probe against Tether for some time. But that was on market manipulation, and what we don't know is whether they are still going on with their probe into market manipulation, the continual rumours that Tether manipulates the price of Bitcoin, whether they've now moved on into investigating historical fraud. Personally, I think that the two are not necessarily connected. That I think the historical fraud is more likely related to the recent action by the New York Attorney General.
Francis, I wanted to ask you kind of a larger question because you tend to be good at explaining things. So, in the crypto world, everyone loves to talk about Tether all the time, but, outside of the crypto world, I think people don't really understand what the fuss is about, right? So I was wondering if you could sort of break down for us, like, why should people care if Tether turns out to be a fraud, right? I mean, people keep talking about these like systemic risk and bank runs and how it will impact the financial market, but I haven't really heard anybody spell out exactly how that would play out. So I'm just curious if you could maybe game out for us, like, what is the worst that can happen here, and why should people care if Tether is actually backed or not?
Well, I'm a little puzzled by this because the assumption with Tether is that it must be backed because people might want to dump all their Tethers and exchange them all for dollars. But I don't think that's really how crypto markets work. So as long as Tether is being used really for liquidity on exchanges and as collateral in DeFi, I'm not convinced that the fact that it hasn't got 100% full reserve backing, that it's got a lot of corporate debt and stuff backing it, is that important. Because what matters is really how much of it people want to redeem for dollars. So the reason why regulators are getting worried about this is that they're looking back to occasions like 2008 when reserve primary broke the buck and there was a mad panic in the repo markets, and thinking, oh my goodness, that could happen again with cryptocurrencies. And because we've got some large institutional players coming in now, we've potentially got banks involved, although they're beginning to clamp down on that and so forth. There is a possibility that a run on Tether, a mad rush for the exit where everybody tried to exchange all their Tethers for dollars and Tether couldn't raise the money, could have knock-on effects into the traditional financial system, and that's what they're worrying about. And the other side of this is that Tether recently revealed that something like 60% of its reserves were in commercial paper, and we don't know exactly what that commercial paper is, but we know that in the past the Fed has bailed out the corporate paper markets when it's got into difficulties. So again, my guess would be that they're looking at the possibility of a run on Tether and thinking, oh my goodness, we might have to bail out the corporate paper market because of Tether. And I would think that that's what this is all about, really.
Francis, but in that interview with CNBC, I think you caught it, the interview that the CTO and general counsel had. They indicated that some of that commercial paper, or at least maybe even all of it, but definitely some of it, was what they said was international. So it wasn't just U.S. Is another worry that they issue Tether against commercial paper, no matter where it is, and effectively increased the dollar supply, if you will, and are propping up commercial paper markets, bond markets, and debt markets in a way just by creating effectively dollars, and doing something where it's essentially just at risk in that regard. So maybe not a run on Tether, but what it means for the capital markets in, say, China and, say, other countries that where they might be holding it. Granted, it's just 60 billion now, but what's to stop it from being 600 billion if that's the case? Is that a real worry?
Yes, it is a worry, and it's really why I mentioned the 2008 situation and the run on reserve primary, because we're talking about offshore dollars here, dollars that are created outside the US banking system, that don't have a guarantee from the Fed, and have no FDIC support or backing. But in the event of a crisis, there could be immense pressure on the Fed to bail these things out. And in this case, we have no idea what this commercial paper is. We're pretty sure, as far as I can tell from talking to people in the dollar corporate paper markets, that it's not dollar corporate paper. It's coming from somewhere else. So it is what we call shadow banking, where they're creating dollars outside the regulated banking system, and what's known as Eurodollar. And we've seen that fail quite badly in the past. So again, that's really what regulators are worrying about, I think.
Yeah, in that same interview, they referred to the issuers of that commercial paper as partners. Was that significant? What does it say about? Is it potentially? Do you think it's the exchanges they deal with? Is it something else? What do you suppose they mean by the term partners when they talk about the issuers of that commercial paper? Is that out of the norm?
I don't think we know exactly who they mean, but I think what we can be clear on what they don't mean is ordinary holders of tethers. They are talking about big exchanges, big companies, big institutions of some kind with whom they have close relationships. And because Tether's really pretty opaque in many ways, we don't know who their partners are. There has been some suggestion it could be big Chinese property companies. We don't know. And in a way, it's the not knowing that's the problem. So we have no way of judging how big their risk is because we don't know who their partners are, and they've steadfastly refused even to reveal the nature of their partners. But they've said, we can't tell you who they are because that would be breaching commercial confidentiality. And if they actually had to name individual companies, then yeah, it would be. But it's actually refusing even to reveal the nature of these companies. And that is odd because even money market funds have to reveal the nature of the commercial paper that they are taking on board. Tether at the moment is refusing to do that. And for me, that's a bit of a red flag. I don't see why they can't reveal it.